If you're a first-time home buyer and you don't know if you should go with an FHA or a conventional loan, this video is going to help clear some of that up for you. I'll break down some of the real differences, pros and cons, and go over which type of loan is going to be better for you just depending on your specific situation. So let's start with the basics. What are these loans? FHA stands for Federal Housing Administration. It's a government-backed loan. Believe it or not, most people think that this is a first-time homebuyer only loan because of the acronym FHA. However, it is just a loan that's backed by the government. Conventional loans are going to be backed by private entities like Fannie Mae and Freddie Mac. They both help you buy a home, but they serve different types of buyers. Let's talk about the minimum down payments, FHA loans versus conventional loans. FHA loans allow for a minimum down payment of 3.5% if your FICO score is 580 or higher. If it's lower than that, the minimum down payment is going to be 10%, and you can actually go down to 500. However, if you go under 580, you must put down 10%. And then we're talking about doing a manual underwrite, which is just overall more work and more scrutiny on all of your qualifications. Conventional, on the other hand, allows for 3% down as the minimum down payment for somebody who is a first-time home buyer. If somebody is not a first-time home buyer, if they've owned a house within the last 3 years, then their minimum down payment is going to be 5% of the purchase price. FHA is more flexible for lower scores, while conventional is more advantageous if you have a strong credit score and little debt. So the weaker the FICO score and the less money that's being put down, the more expensive the mortgage insurance is going to be. What are the debt to income ratio requirements for FHA versus conventional? FHA tends to be much more forgiving. They do allow for you to go up to a 56.99% debt to income ratio, and that's on the back end. Conventional will usually cap you out between 45 and 50%, but this will depend on your credit score and the amount of cash reserves that you have. So if you're looking to max out the debt to income ratio on the back end up to 49.99 or 50%, then you should have some cash reserves as a compensating factor. FHA loans are not necessarily reserved for people that have lower FICO scores. People with stronger FICO scores oftentimes go with an FHA loan because they are able to increase their purchasing power. And in places like Southern California, having that extra $10,000, $20,000, or $30,000 in your approval makes a big difference, and it also makes you more competitive in the market. What about the property requirements between FHA and conventional appraisals? FHA has stricter guidelines as far as the property itself. You can't have any chipped paint, you can't have any missing or broken handrails, you can't have missing appliances, you can't have any broken windows, those types of things. The FHA appraiser is going to be looking at specifically and pointing it out. Condos have to be FHA approved, meaning the homeowners association goes through an application process. They look at specific criteria, and then FHA grants them the ability to take on any kind of FHA loans for those properties. Most homeowners associations don't really want to deal with the extra paperwork. They don't want to have to worry about re-qualifying over and over again. So a lot of condominiums are not FHA approved. If you're looking for a condominium or a condo, then you would more than likely be better off using a conventional loan because that opens up the options that you have available to you out in the market as you're looking for homes. So which is better for you, FHA or conventional? FHA might be better for you if you have a lower FICO score, if you have less money saved up for the down payment, and you need more flexibility for your debt to income ratio to increase your affordability or your approvability out in the market. Like I said before, the FHA doesn't necessarily only work better for people with lower FICO scores. It can actually also work better for people with stronger FICO scores as well, since they allow the debt to income ratio to go up higher than a conventional will. Conventional loans might be better for you if you have a stronger credit score, you have a larger down payment, or if you have 20% down, then you won't have to pay for any mortgage insurance, or if you're buying a condo. Remember, the condominium association, the HOA, has to be approved by FHA in order for somebody with an FHA loan to be able to buy a home in that development. So for example, a person with a 640 FICO score or even a 640 to 680 is probably going to be better off with an FHA loan. Whereas if you have a 740 FICO score or higher, then you're more than likely going to be better off with a conventional loan, and that's because of the cost of the mortgage insurance. Once you cross that 740 credit score threshold, mortgage insurance starts being better than mortgage insurance on the FHA loan. If this video helped clear up any confusion or was helpful, do me a favor and hit the like and subscribe button. And if you'd like a free consultation to see what programs you qualify for, use the link in the description to set up an appointment on Zoom with me.